Hey everybody, we are live. Hope everybody had an awesome trading day. I mean, my goodness, what a day today. You Not every day is going to be like this, okay? I mean, just a lot of things just really worked out today from the game plan, and we just had a huge move today to the upside. We haven't seen big bars like this in a while. I mean, it's pretty exciting when you look back at the charts. You just see this huge green bar just pointing up. It's almost as fun as looking at these huge red bars too, right? Um, you know, uh, who knows what the real reason is? A lot of the headlines say, the market had the elections priced in, and it just, was that's why it went up or whatever the case is. I don't know. I mentioned this morning in my first Twitter that I said it might be bearish, but honestly, I had this intuition that I don't know. There's some just pressure relief in the market, so that could have been just uh, short covering, whatever the case was. But I mean, the gap up just kept going, right? And so if you're on the right things, you could have done really great today. And I know a lot of folks in our Twitter area did well. Kim on Twilio, had pointed this out last night, and I mean, look. These are not common trades, right? I mean, this is a phenomenal move. I haven't seen in terms of options, I think it was almost like 4 or 5 times, and that was after entering in a 15-minute bar. It still moved a ton, to get through the first 15 minutes. But you see, once it took out this resistance right up here, it just got more power, right? And it helped that one, it was gapping up, and two, the market was gapping up too, right? And so it just gets all that extra power because of it, right? Just an FYI here, it looks like futures are down a little bit, so we'll see what we got. But the good news is if it is down tomorrow, we might get a similar move to the downside. We've got some awesome ones that are gapping down on earnings. We got Roku, which can really move, and Square and Wynn Resort. So I mean, there's a lot of good short opportunities tomorrow. And a lot of gaps to be filled too below, because a lot of things gapped up today with the market. So it's going to be really interesting. So yeah, so just a real quick review on Twilio. This was the orb strategy, right? I primarily trade 60 minutes, but I'll do 15 on an orb. And so the orb is the opening range breakout, right? And so you have to do it. You can't do it on just the market gapping up, because those tend to fade. But if you're gapping up on news or earnings, or a solid upgrade from JP Morgan or Goldman Sachs that really get something gapping up, you can trade these, right? And so today you get a 15-minute gapper, right? And a 15-minute bar came in here, and then never triggered right away, but it went inside 15, right? And then consolidated here at the VWAP, and then once it broke the inside 15 to the upside, it subsequently broke the 15-minute orb here, and then just rocked it, right? I mean, it was just all day. It just kept on going. It went from, so what is it? Let's say you did it, if you just did the 15 orb, it was 87.33. I mean, almost, look at that, almost hit 97, and then just 30 more cents would have been 10 points on Twilio today. And it closed green with some volume too. So like I said, tomorrow, day 2, we'll keep an eye on the 30-minute orb too. And so that was a really good one. And then we added later Zillow to the short list, and it didn't really trigger on the. It did later on the 15-minute orb here. See, I mean, huge gap down, big volume. I mean, for Zillow, what did it do yesterday? Every hour was only like about 100,000. This first hour was like 3-4 million shares. So just a lot of action going on it, right? But you can tune out all that noise, right, by going to the longer time frames or doing the 15-minute orb, right? And so I mean, it just kind of went down, reversed up, blah blah blah, stayed within this whole range the majority of the day, right? And then we checked on it later, and market was coming in, futures were pointing down. So it's like when futures are pointing down, you go to the game plan list, you go to the go-to list, and look for things that were short ideas, or orbs that were short ideas, something that was gapping down, right? And then I try, if I was home and had more time to be doing this, I would try to tweet out as much as I could the upgrade and downgrade list that comes from the Fly, But you know, those are usually pretty good. You get the top 5 ups and the top 5 downs, and you can even trade a lot of those on orbs too, as long as it's a good upgrade, like not a no-name upgrade or downgrade, but something that really, you know, a company that can move stocks. But anyway, yeah, here, so it went inside 60 here, right? And then the market started coming in and you look for shorts, and here this is inside 60, right? Again, and then you just trade this break under the VWAP, right? So you're at 31.30, and then it breaks to the downside, and like basically the trade was the game play. Your first target is trying to break that orb, right? And so, you know, it's basically 1-to-1 risk reward, a little bit more, but it did it, right? I mean, it you know, broke to the downside, continued, you know, paused, came up a little bit, put in a shooter, and then continued. Then it broke, and you know, and that gave you, you know, further push to the downside. So I mean, that would have been a good trade. And there's so many good ones today. You know, it's just ridiculous. So the huge bars today. I mean, right? I mean, these huge, you know, folks who are just starting trading and all that stuff. I mean, big 500-point moves in the Dow is, you know, it only happens once every, you know, couple times a year, right? Those type of things. But last big one was February to the downside, and then we just had downside and upside here. So so yeah, so that's why making a point a day is great. You know, I mean, just like one trade like this a day, right, where you can make, you know, whatever your multiplier is, $100. Let's say you doubled up on shares, $200, or you did options, whatever the case is, and you know, I mean, a point could be $1,000 for you. It just depends on everybody's threshold, right? So I mean, just one good trade a day, and you know, as long as you have the right setup and everything's looking good, that's great, right? And so so yeah, gosh, it looks like my internet's going really slow here, so sorry guys, you know, for the delays here, but you get what you pay for, right? But anyway, so just kind of moving on here, I wanted to take a look at a couple things. I just posted, what else I want to look at? Yeah, so any of the 15-minute orbs from today, we can look at tomorrow as well. One stock I really didn't get to look at today was Coors. I am live, right? Yeah. Double check that. Oh yeah, looks good. It was Coors. I didn't really see this one today. This would have been, I don't know if this gave you a 15-minute orb today. Yeah, see, these ones I don't trade the reversals. I mean, you could, right? But it's just, you know, it's just too complicated for me trying to trade a reversal. So just wait to see if it breaks, right? But huge gap down on volume, right? So tomorrow, you know, don't worry about this orb today, you know, from today, but tomorrow watch your 30-minute bar and see what it does. See if you can get some more downside on it. So, you know, I don't think the selling's done on this guy. On the there's, you know, plenty of stuff. Just on the monthly look. I mean, the monthly pivots. This thing can go potentially all the way down to $30, right? So I mean, it can go to zero, but I'm just saying it's not done after today. There could be some more selling left in it. You can see it's no stranger to selling off, so that could be pretty interesting. And here you have the 5MA crossing over the 10MA too on the monthly on Coors. And we traded that a couple weeks ago on a double inside day that worked. We made some money on that, so that was good. I'm sorry guys, I'm not seeing any updates on this thing. If anybody, if you guys can hear me, just put something in the chat box just so I know you guys are that everything's cool, that this transmission is coming through. Otherwise, I'd have to restart. I've got stream health. I'm green, so we should be good. Maybe just on my side, it's not updating. Yeah, kind of funky looking. Cool. All right. So yeah. So those are those. What else do we have? Yeah. Okay. So today, like I said, for tomorrow, we've got. Let's see what we got going on here. We got Wynn Resorts gapping down pretty solid. So that should be good on the 15s. Roku. Plus we've got, you know, futures down too. That should be good. Yeah, Roku's gapping down still, and then Square. Square's a tough little guy to trade. I wouldn't even mess with Square tomorrow. It could go either way, and it would probably look back on it and be like, "Oh man, that was an awesome trade." But Square is just a little tough little stock to trade, and you know, so yeah. So I think, you know, you can still make plenty of money on Wynn and Roku tomorrow if they trigger. So that's good stuff. What else did I like for tomorrow? Oh, I just tweeted out CVS short, right? CVS was on our long game plan today. I think I tweeted out this morning that it was beast mode, and it was. I mean, it just broke and ripped. But today it put in a you know, big shooter candle, right? And so it basically gapped up, what was this, low 78.70. So it gapped up over the gap, right? Yeah, it gapped up over the gap. Yeah. And then just kind of ripped, did a breakout, and then came back in, and now there's like a double gap here, here, and here. So it's all this space here. You can make money on CVS, I'm sure, very potentially tomorrow to the short side. And then, so I'm looking at that, and then I'm also looking at maybe, there's not a lot of, because there's a lot of things that rip to the upside, so, definitely watch that. Here I was just looking at Schlumberger, Slob, and just, just saw some positive divergence here on the RSI, and, it had an inside day yesterday. I did see it on the list, didn't really note it because it's a boring stock, but you can see it can still put in some big bars. So you can see it broke this inside day to the upside today and kind of formed a red hammer. So we'll see if it breaks out a little bit. It might be more of like a swing type trade to see, if it potentially fills this gap right here. So there's a couple things on the long side for tomorrow. I don't think I had too much else I wanted to review today. I mean, lots of things just really worked, and that's awesome. So I really hope, everybody, I got a lot of good tweets that people had success off the game plan today, and that makes me happy because anytime we can do, come up with ideas or share ideas that help people trade and trade better, that's a good thing. So, Josh, what's going on, man? Free sale. Oh, nice. Yeah. Cool. Yeah, El Cap. Goodness gracious, I could never even think about doing anything like that. Like that, Twilio losing steam. Want to trade puts. Hey, what's up, Praveen? Good. Well, I'm glad everybody can hear me. Yeah, I guess my my screen little thing in YouTube here is just not showing up. So yeah, there's a couple things. I got a request today. From Julian. He wants me to do one of these days. Kind of a go to on demand here in Thinkorswim, and just kind of like, maybe you guys pick like a day, and like I'll just kind of go through and just skip to the open and just kind of do a quick glance and show you what I would do is look at the previous day's 60s, and then see how I would trade it. That morning I would kind of go through the stocks and see it, and then just kind of trade it live or on demand for like a couple minutes, just so you guys can see what I'm looking at, and then skip to like the the 10:30. I'm sorry, the 11:30 time frame. And then the 1:30 time frame, the 2:30 time frame, and look at the 60s on those, and just kind of walk you through how I look at things. And then one day when I'm at home, because I do get a day off every other Friday, I could do like a live stream at the open and just kind of show how I look at those 60s and use those as anchors for trading. And then because that worked great yesterday on like SPY and all that stuff, it works a lot on a lot of ones. So if I could do that live and just kind of show you and talk through what I'm seeing on the 60s and how I trade it and all that. I mean, it's not super complicated, right? If you've read my rules and all that stuff, it's pretty easy, but sometimes it helps just to watch somebody what they're doing. So anyway, Praveen, yeah, so Twilio, I always give these things like first day you go with 15ers, and then the second day you look at the 30s. So tomorrow I'll look at the 30s, and the beauty of it is because you're not holding it overnight. I mean, maybe some of you are, but it might gap down tomorrow, or it might open and go down tomorrow, but you have a new 30-minute orb that you can do. So if it wants to break out again, you can take it to the upside, and you might get a further breakout potential. And I only go in the direction of the gap, but it doesn't mean you can't trade that ORB to the downside too, right? It's just too complicated for me to try to justify it, right? But yeah, so day one and day two, and the same thing works for like a good IPO, initial public offering. You can make some bank on that on the 15, to the upside, and then also the second day on the 30 if it's a really good IPO. And so it just carries into these. Other than that, yeah. So Josh, you kind of wanted me to talk a little bit about being gun shy, right? Josh, you're the same Josh on Twitter today, and like you're like looking at like trading climbing El Capitan. I don't think you have to worry about being gun shy. So I mean, the reality is like you just have to trade. So when I started trading full time, I remember the first day I was like I had my notebook with me, and I was like, all right, I'm just gonna, everything's gonna be perfect. I'm not gonna lose money, and I mean, I was freaking out, right? And then I made like one trade, and I made like $10, and I like got out, and I was like, okay, I'm done for the day. And so I spent like the rest of the day just like staring at the screen, and I was like, oh, I missed a trade, and all that. And I so just started taking notes, and then I kept doing it of all the stuff I was missing, and I was like, all right, I just need to take a leap of faith, right, and just do a trade. And this is before I really started to focus on risk management more. I mean, I always heard manage your risk first and then trade. And I was like, yeah, whatever. But once you make that leap of faith, that's one thing. But you have to size right, and that's why I encourage like just have your first couple trades going, getting back into it, going small, and whether it's, and don't even mess with the open, right? Until you get more experienced trading it, right? So the orbs really help with that. But truly on these, you can make big bucks on it and all that stuff. But this 15-minute orb on Twilio was how much? This thing, the range of this thing was $6.63, right? So technically, your stop is going to be at that, $6 away from the entry, right? Really, I mean, initially, you can put it lower and all that stuff, but you want to give the trade a little bit of time to work, right? And so now, but when it went inside 15, then you can trade off of that. That's an actionable signal that you can trade off of. And then your stop, this range is only $1.83. So you're only risking $1.83 with a stop right there. And the stop is, pretty much below the VWAP. So that gives you some security that, hey, if it comes down like it did here, it'll at least bounce off the VWAP. And if it doesn't, it ain't going to work anyway, right? So, so in this situation, but if it were to break here off this first one, you're risking $6.63. And, so you got to scale accordingly. So it's like, do you do 100 shares and risk $663? Because what if it does stop you out? That's a horrible day, right? I mean, that's like, for the average trader, or the, unless you got like $1 million account or something like that, like, I mean, $600 is a lot of money when you're trying to make, $200 a day just to get going. And so you got to be real careful with that. And at stock like Twilio, if you watched it today, if you watch the price action on it, it moves. I mean, like, so, if you got a lot of shares on it, I mean, it jumped like, it jumps like 10, 15 cents pretty quickly, right? I mean, that comes back on you on 1,000 shares, 2 ticks at like 30 cents, you're down $300. And, that's no fun, right? And so it's like, what do you do? I wouldn't do 1,000 shares on this, but because then you're risking $6,000, right? That would be terrible, right? But so you have to really know before you even get into a trade what you're risking, and I don't know, some noise in the background. Hopefully everybody's okay. What you're risking, right? That's why it's so key to know risk first. And so to break the ice and to go forward, and take that leap of faith. Maybe not on the open, you know what I'm saying? Because it's so volatile and all that. So that's why these orbs help, because it shakes out the open, but it's still, kind of opening trade. So you might want to wait on another strategy, like such as like the 60s or something that you're on a larger time frame where you can let trades work and feel more comfortable. Now, I will say this, I always say if you're green, don't let it go red. And there's nothing wrong with going in a trade twice, as long as you're not getting, if you get like a paper cut and get stopped out for like 10 cents or something like that, as long as you're really confident in the trade, you can always come back in it. Because I'd rather get stopped out for $50 here than let it come all the way back and get stopped out for 600. You see what I'm saying? So, and then give it at least another chance to break, right? If you're seeing the momentum and you're seeing the trade working, you just had a bad entry, right? Don't sit there and look at it and be like, no, it'll come back or it'll turn around, right? If it's not working, get out, and you can always get back in if it re-triggers. You see what I'm saying? And that happens a lot on the FANG stocks. And so it was like last Friday, I was tweeting a lot, because the market was going down, and Apple missed on earnings and all that stuff. But once you get used to trading certain stocks, that's why I always just focus on the FANG stocks, is because when you get used to trading, you kind of know how they behave around breakout points, right? So I know that Apple, likes to, you know, if you have an inside 60 that's going to break, unless the market's just ripping, right? I mean, if we're dealing with a kind of a sluggish market and all that stuff, I mean, Apple will test a breakout point like 2, 3, sometimes 4 times, and same with Facebook. I mean, both of them like will test it multiple times before they do it, right? Before they actually break. So you have to be prepared for that. You know, it's like you see it coming up that first time. Sometimes you got to have the patience just to let it go, and if you miss it, you miss it, right? Now, if it pulls back in, then you could be like, okay, I'll give it, maybe I'll wait this time, and sometimes wait third time's a charm, sometimes fourth, sometimes fifth on the breakout on an inside 60 break, because you just have to give it time, right? Because when you go down, you know, into the guts of it, into the lower time frames, you know, what's really happening is, let's say here, you know, let's go to the 60s and just show you real quick. So see here, see how these 60s were kind of consolidating, and then you had an inside 60 like right here. So this hour here between, you know, whatever 2:30 and 3:30, if you go to the 5s, right? So 2:30 to 3:30, right? It's like, okay, hit a high, right? That's that top of that hourly is resistance now. Comes back in, and then it's I'm gonna come in and break it. No, not gonna do it, right? So this is what's really happening in the background, right? So you have to anticipate, you have to realize that that's happening, and it's gonna continue to test that resistance spot until, you know, some volume comes in and some momentum comes in and breaks out. And so that's why those 60 breaks, you know, something can happen. But you can see here it broke to the downside, right? So the low there was what, 95.12. And so you drill down here, and so 95.12 is right here, right? So you can see it put in, you know, support there, came up, came back down, came up, came back down, support again, broke it, right? What was the low here? Yeah, 95.12 again, right? That area, broke it, came back up, right? So if you tried shorting there, you know, doing the reversal attempt, you know, you got squeezed out of it, right? So, and then this time it went through and then formed a hammer, right? Came back up again. It was the third time, and then launched. So like then it was a 1 point move. So you have to realize that just because something looks like it's going to break or is about to break doesn't mean it's going to do it the first time. And that's why trading a certain set of stocks like the FANGs, or at least watching them all the time, you get kind of used to how they trade, right? And so once you realize that, then you get more confident in your setups, right? And then you can go ahead and take the leap and go in, right? And then you just scale it based on wherever your stop's going to be. So let's take Zillow from today, right? So today Zillow gap down, right? A huge gap down, right? I mean, this is awesome, right? And so yeah, it'd be so cool just to buy it at the open and just make, how many, what was it, 3 points on that like right away. But, you know, these things are crazy at the open, right? I mean, it went down and then came back up. I mean, that's how you get just destroyed, right? So that's why you use anchor points on regular days on the 60s, right, for continuity. And then you do the orbs on, on the first days, right? Because look what happened. All the movement happened in that first 15 minutes today, right? So obviously it never broke to the upside, but we were focused on the downside, right? If it gaps down, do an orb to the downside, right? So it never broke this level, right, until later in the day, all the way here at the end of the day. It finally broke it to the downside, right? So you could either wait and watch all day, or like I said earlier, is like when the market's coming in, the futures are pointing down and everything, go to your short list of what you think would be a good short and see how it's behaving. And so here, and it's easier if you're at home and have multiple screens. It's hard on a cell phone, but here you can see, right, when inside 60, so at that point you might be like, hey, I'll trade a break on that, right? Well, then it went double inside 60. So that should lead you to believe that, hey, this thing is going to break soon, right? And then your bias is to the downside, right? Because it gapped down, right? And the game plan is that if it broke to the downside, you want to take out that low. So that the orb will trigger, and then when it breaks a low of day on something like that, then you're going to get some more movement, right? So once you see something like that, you can see here that this double inside 60 bar, look at the range here, it was 94 cents, right? So that's your risk, right? That's your risk on this trade. So you have to ask yourself, how confident am I that this is going to work? Well, if everything started coming back in, like Netflix is coming in and Apple is coming in and all that stuff, and the futures are pointing down, you got to give yourself, and it gapped down huge. It's like, who's going to buy this, right? Except for like the the hooligans who who want to buy a reversal and all that stuff. It's not that they don't happen, but it just doesn't make any sense, right? I mean, when it gaps down so much, and it just doesn't make sense. And now, a lot of things do reverse, no doubt. But I'm just saying, you've got a high propensity for this thing to continue to go to the downside. That's why I posted it too. I was like, hey guys, check this out. So anyway, the point is, there's your risk, right? 94 cents on this trade. So if you do 100 shares, right, you're risking $94, right? So $94, if your goal is to make $100 a day, $94 is like a day's pay, right? So if you get stopped out of this thing, right, you just gave up a day's pay, right, for that one trade. So how confident are you that it's going to work? For this one, I'd say pretty confident, right? So I would probably do the whole 94. You don't have to do 100 shares on it, right? You can do 50 shares and only risk, right? What is that? 47 bucks, right? 47 bucks, I would say, you could probably risk. And your goal, right, was to get to here, which is 33. So the risk to reward was 31.30 all the way down to 33. So $1.30. So it's more than a 1-to-1 risk reward, which on a day trade is great, right? Is good. So the potential makes sense. The risk isn't, is what it is, right? But you know what it is. You know what you're okay with losing. So, and I'm not saying okay with losing. I'm talking about, like, if you got stopped out of this, you wouldn't throw something at your computer. You would be like, okay, cool, I can still make another trade today, right? And it won't bother me. I'm ticked, but because nobody likes to lose, right? I'm ticked, but I can still make another trade today. And so that's how you want to size your risk, especially in the beginning. And then in the beginning, if you're gun shy, put it even in half a little bit and just get green on trades, right? Until you're confident enough where you can start taking them more good setups in the future, right? And so in this situation, it broke to the downside, and actually it broke pretty decent. It really never really came back up to test it. And so that's why I always say, once the trade goes green, move your stop up, right? Start getting good at managing those trades so that once you're green, like, you can take a little bit off, right? So let's just say you did 50 shares, go in and adjust your stop, because your stop was originally up here, adjust your stop to 25 and move it up to profit, and then bank some profit, right? Then mark it out of the other 25. Now your stop is here. You've already banked your money. Even if it's 10 cents, you made, what is it, $2.50 or whatever the case. You made your green, right? And then your stop is in profit territory. So even if it came back up and ripped against you, you're still green on that trade, right? And if it came back, let's say it did, and it came back up here, right? You could trade it again to the downside and do it again, right? You don't have to let these things stop you out, right? That's another thing, as long as your sizing is right, right? So if it came back up and you stopped out for $5, no big deal. If you stopped out for 500, well, now you've got to make 600 for the trade to work. And I don't care who you are, it's tough to, it's tough to do that kind of scaling, right? So you have to know. That's why I always say, like, once you're green, trim some off, bank some profits, move your stop, and this way you're safe on the trade, right? And then if you want, you already hit a win, just be done for the day and finish the day green, and then you can reflect on it and then look at other trades and see what you would do and see how it plays out, and just have that confidence of finishing green, and then do it for a week, right? Until you're just a little bit more comfortable, trading, and then go back through your journal and just really just start journaling everything. Even journal stuff, like so when I do my journal, like, I'll do all the trades I took, right? And I'll just do it. Basically what I do is I do a screenshot here, and you should also do a screenshot of your, like, honestly, if you've got a computer with you, you should see what it's doing on all the time frames too, just so you can get, an idea of where you're at in relation to the moving averages and all that stuff. And then do screenshots of all those, and then just talk about your trade, whether it worked or if it didn't, and just vent about it and talk about it, what worked, right? And then just do that for all your trades, right? And so don't trade a lot, and just do a couple a day, or one or none. And then go back to the ones that you almost took, or the ones that you thought looked interesting, and screenshot those and put those in the journal too, and label that at the bottom, trades I missed, right? Trades I didn't take. And just explain why you didn't take it. And even if it's like, well, I was only doing one trade today, that's fine. But hey, look what I missed. And it might be like, I heard news come out on, whatever, Zillow later in the day, where the CEO just quit, like say like right here. And it's like, for some reason I was afraid to get in, but I watched it and just, start writing all that stuff down for the trades you missed. Like I do it for Tesla all the time, because it's like Tesla's a crazy stock to trade. And if you've ever traded it, with just common shares or even options, I mean, you just get crushed on it, right? Now, if you're right and the news is legit, it's good. I mean, you can make some money on it. But man, this is one, that often, like, so the day that like Elon did all his tweeting, like I left $2,000 on the table on that, like, and I'm sure a lot of people did. But it's like first the news came out that the Saudis were going to back him, and I didn't trade that, even though the technical setup matched the news. It was like an inside 60 hammer over the VWAP that, and then the news came out. It's like, why didn't I trade that? It was a 3-point risk, but I mean, it ended up launching like, I don't know, $20 or something. It was like ridiculous. And then Elon came out and did his like, tweet that he just had to pay the SEC, $20 million for, and then it launched even further. I didn't trade either one. I watched it all happen in front of my face and didn't trade them. And so that went in the journal, right? Like, so it's like, that was, totally missing that. So anyway, that's kind of, we talked a lot today on Twitter, and so I just wanted to kind of put that on video for you and here and just kind of talk about it. So yeah, just, once a trade goes green, just trim some off, put some money in the, in the bank on it, and move your stop to profit and protect yourself. And the more you get accustomed to doing that, the more successful I think, the less gun shy you'll be. That's my philosophy. So, oh man, anywho, yeah. All right. So we say the 15-minute orb, what counts as a breakout? So are you using the candle closing above the first? Yeah. No. Just the 15. So I just call that, and it's just something I heard along the way, that it's called an orb, right? Even though it says opening range break, is the break. Just that first. I'm just talking about the first 15-minute bar, right? So in this case, whatever, this day, let's just say it gapped up, right? And there was probably news or something, like Elon was doing something. So if you traded this one here, this is your orb bar, right? Your first 15-minute bar, right? And so you wait until that bar here breaks, right? And then, and here it did the same thing like Twilio did today. It went inside 15. Is this today? No, it was today. A lot of things, followed the same pattern today. But went inside 15, and you could have traded the break of that inside 15 to trigger the orb, the opening range break, that opening 15-minute orb break. And then look, green, inside, broke to the downside, so you just stopped out there, hammer, and you could have, traded it again to the upside off of the hammer, right? So, but anyway, the point is the 15-minute orb, that's your orb right there, your opening range bar, and then you trade the break of that. So you could have waited, or you could have traded off the inside 15 to the upside, or just waited and just traded that orb here, boom, to the upside. See? So the same thing happened on Twilio. Just to review, 15-minute bar. That's your breaking point here. The high of that was 87.33. So you wait. You can do the 15-minute inside 15 break to the upside, or just wait for 87.33. Trade that to the upside, and then all the way up. You could have just moved your stops to the bottom of that bar, bottom of that bar, bottom of that bar, bottom of that bar, bottom of that bar. I mean, and then just, it was a great trade. This is an awesome trade today. So, and of course, not all of them are like that, but but that's it. Yeah, that's how you trade a 15-minute orb. And then so tomorrow, my favorite one that I've just been reviewing, because I made pretty good money on this the other day, is IBM. Right when it was bought, said it was buying Red Hat. Where is it? It was on the 30th. What day is this here? That's the 31st. Missed it by a day. 1 second. Time frame. Go 10 days. Yeah, so it's like, hey, yeah, see? All right, so you go, I'll show you on the 15. Anyway, the 15-minute, basically here, it's like, everything's cool. Oh, we're buying Red Hat, douche, right? Because we're spending like more money than any company's ever spent, or one of the top two. We're spending $34 billion, douche, right? And then, then if this is the 30-minute bar, but the 15-minute was the same, right? Or reverse right at the open, right? So you don't trade this one that day, right? And then it kind of faded back in and all that stuff, but it was a little complicated to trade that day. But the thing's going down, right? I mean, it's so heavy on what many consider a pretty bad deal, right? So the next day you do the 30-minute one, right? And so the 30-minute one, it suckered a bunch of people in here to the upside, right? And then once this is your 30-minute orb right here, that first bar, and then you just do your trade to the downside, you short it right there, right? And the risk on this one was $1.65, so you do 500 shares, you're risking $800, right? Which is, no one wants to get stopped out for $800, I promise you, but you don't have to let it stop you out. Like I said, like if it comes up, and you're 50 down on it, just wait, and then get out. You're only down 50, right? See if it triggers again. Anyway, it did, and so let's say you had to re-enter it twice. It ended up moving pretty quickly, and then just kept going and going and going, and then going and going and going. I mean, this was an awesome trade, right? So that's the 30-minute orb on day 2. So that was day 2. But yeah, the 15-minute orb is is just that first bar, and then you just wait for it to break in the direction of the gap. That's how I do it. That's my rule. So you can try to do a reversal, but I don't know. I think it's just you can do it. It's just being a little too cute and all that stuff. And I'd rather just keep it simple and just be like, hey, I'll trade it. If it doesn't trigger, it doesn't trigger, right? So, and I mean, they don't all work, right? But they do work consistently, and as long as you can manage your trade, you can get out of it and be okay, and just not worry about it. So, and that's the key, man. Just have have setups that are your favorite setups that work for you. I mean, like one of my favorite ones is like that CVS trade, right? I mean, they don't work all the time, but a topping tail like that is a pretty consistent trade. I'm not going to say it works. It might work a little more than 50% of the time, but you just got to evaluate the market, right? That's why you use a couple other indicators. You don't just do it just because it's doing it. Follow the market, right? If the market's puking, you want to find something you can get in on, right? So get in on some CVS and fill that gap. You know what I'm saying? So and that's basically how you overcome the gun shyness. And never ever put yourself in a situation where you're gonna lose money, like to the point where you're gonna blow up an account, or because then you're going too much, right? Then you're trying too hard, too quick, right? Just do a little bit, then just slowly grow, right? Eventually you'll add zeros to your trades, right? So eventually a $10 trade, if you get consistent, in a certain setup, that $10 trade is going to become a $100 trade next time because you're getting good at it, right? And then, then eventually a $100 trade will become a $1,000 trade because you're good at it, right? And so you just, as long as you understand your risk and how to get out, and it just takes practice. And the only way you're going to do that, you're going to lose, right? I mean, trust me, we all lose on trades. So you're going to lose, but you're going to limit your losses and you're going to learn from it. And then you're going to journal it and, write down everything you learned about it, what you did, and be like, I should have got out early. And that's the thing, is like nothing is perfect in this, right? So you gotta, when you look at it, you just get a feel for how price moves, and you're like, I didn't like how the price was moving, and that could be your journal entry. I didn't like how the price was moving on this one, so I got out. Yeah, I got out early. I lost $50 on it, and I left $1,000 on the table, but I didn't like how the price was moving, right? And then you can go back and look at that, and as you review it, throughout the week, be like, oh, okay, I see what I did. And as you learn more, and you can kind of integrate, those, new strategies into it, and be like, hey, I did notice though that, on that shorter time frame, if I went over to the 15s, the 15s was at, right under the VWAP, and it put in a, like a nice shooter bar here, and if I just kind of referenced that before I took it, I might have been more confident in the trade, right? Or it's like, or you could be like, okay, well, I didn't notice, like I failed to notice that maybe the inside week here, look at CVS, like it's like, yeah, it opened up, but I didn't realize I'd probably get more power on it because it was an inside week to the upside. And, so it was just something I missed. So when you go through and you analyze your trades, that's why I say, look and see what the key time frames are doing, and you'll start seeing more, and you'll start seeing more setups that, that work. And, just as you journal and do that. And so, and the more you journal, I mean, it's exhausting, like to go through every chart and write it down and copy and paste it and start writing about it and all that stuff. But that'll actually keep you, as long as you dedicate yourself to your journal, it'll keep you from over trading. Because if you're committed to doing your journal and you make, say, 10 trades that day, well, you're gonna have to write 10 journal entries to justify why you took those trades, right? And so, and that's why it's kind of fun, posting stuff to Twitter. It's kind of why I got into posting stuff on Twitter, is obviously I want to help people, but like, I don't like this even, when you post your stuff publicly, you're kind of putting your neck out there, like for, when you're wrong, it's never fun to be wrong. Right. And so, it just helps me, for me, that's one of the reasons I do it, is to, in terms of a selfish reason, is to force myself to really evaluate the trade if I think this is good, if somebody else is watching it or, considering following along, or, thinking, or even asking if I have any sort of credibility, right? So that helps too. So anyway, yeah, I thought it was a good topic to talk about today, other than just, jamming through charts and all that stuff, because psychology is, I really think, 99% of the game, right? And if you journal, it's like, Dear Diary, right? You learn about yourself, and can really learn about how you trade and how you think about trades, and then you can grow and learn with that. So journal. It's key. But anyway, that's all I got for tonight. If does anybody have any chart requests before we call it a day? I think we got some good action for tomorrow. Roku and Wynn Resorts alone, I think, could give some, good opportunities tomorrow. And then we'll check and see if there's any good upgrades or any new news on stuff, or any, morning gappers, morning earnings or something like that, to add to the game plan and all that. So, but I think we got plenty to keep busy, and it's Thursday. So just beware that option premium the theta starting to decay a little bit faster tomorrow. So if it's a choppy day or things don't move, just watch theta if you're doing options. And yeah. Oh, what's up, Praveen? CXW. This was a good one from yesterday. Let's see what we have. Okay, so monthly, right? Still kind of same. Still around the month under the 10 MA. Weekly, still around the week, showing kind of a downtrend here. Earnings. What did it do? It kind of went down earnings right here. Daily earnings came back in and gave you an inside day today, right? So range of the day was 89 cents, but it's worth at least putting an alert on just to watch and see what it does, right? So you trade an inside day break to the upside, or if you can get shares, inside break to the downside. One. Okay, and then let's see, decent close here, right, on the 60s. Kind of chopped around for a bit, and then put in this, it was like, whoa, what's going on? And then put in a hammer, right, albeit red, and then got hammer follow through on the next bar, but volume went down, right? So not a lot of confidence in the close on this, but you can use this as an anchor for tomorrow at the open. So see if it'll do a continuation trade, depending where it opens on that to the upside. And then you could do a failure to the downside. And then if it takes out that tail at the open too, then you should be able to get at least here or here on the downside. So, so CXW should be, might be pretty interesting for you. So nice one. Any other chart requests? Post some good ones. Apple kind of shocked me today. I think it's going to be one to trade for next week, depending on how it closes this. But I did like how the weekly chart is looking really, really nice on a reversal here. So, nice bottoming tail on the weekly, and so definitely keep an eye on that for next week. So we'll see how we close here. But there's plenty of other stuff to trade. You don't have to trade Apple really, unless something cool comes out. But anyway, guys, appreciate it. Obviously, if you have any questions, you can post it in the comments, and that goes to my email. Or you can just post something on Twitter, and I'll get back to you as soon as I can. So hope everybody has a great night and an awesome trading day tomorrow, and we'll have plenty of things to look at. So yeah, just take it easy and don't have to go big, and just get green and move that stop to profit, and before you know it, you'll be rocking and rolling. All right, guys, have a good night. I'll talk to you later.